Thanks for joining David, Kevin, and myself for the educational video for the month of May. We hope you and your families are doing great. Today, the guys are going to talk about dollar cost averaging. What is it and when's the best time to deploy it? I'm going to pass you over to the guys, but please, if you do need anything, don't hesitate to give us a call. Take care.
In a perfect world, investors would always buy low and sell high. However, in reality, we know that timing the market is impossible. Nobody knows what's going to happen in the markets today, tomorrow, next week, or next month. Predicting a market performance in the short term is impossible. Now, there is a strategy that can help you get capital to work in times of uncertainty. Right now with the trade war and geopolitical events happening around the world, people are rightfully nervous. And if they're sitting on cash, they're hesitant to put that money to work for fear of what might happen in the short term. And so today we're going to discuss a strategy called dollar cost averaging, which is meant to help you get money into the market over a set period of time and allow you to build wealth over the longer run, 5, 10, 20 years.
So dollar cost averaging is essentially just choosing a fixed period of time to invest over and a fixed amount of money and just slowly putting that money to work over that period of time. You can think of it as putting $50 worth of gas into your car every week. Some weeks you're going to be buying gas when the price per liter is a little bit lower. Some weeks you're going to be buying it when it's a little bit higher. But at the end of the day, you're consistently keeping the car running and moving forward. There are a number of different benefits to this strategy, but two main ones are, from a monetary perspective, you've eliminated the guessing of trying to pick that low point in the market and make sure you get in right at that time. By dollar cost averaging in, you are just buying a set amount every week without having to pay attention to that. And that leads into the second main benefit, is that it eliminates the stress of having to reassure yourself that you picked the right time, or second guessing yourself if you did put money in and the market drops a little bit shortly thereafter.
Let's look at an example of this strategy. The chart on your screen shows a $12,000 investment into the S&P 500, so the 500 largest US stocks, in January of 2022. And January 2022 was a negative year for the markets. The purple line on the graph tracks a $12,000 lump sum investment made January 3rd, 2022 and held for the duration of the entire year. The orange line tracks a dollar cost averaging strategy where $1,000 a month is invested every month for 12 months. You can see the results of this strategy on the left side of the chart, and because of the overall downtrend of the market that year, the dollar cost averaging strategy was able to perform better, as it was able to reduce the average share price paid and thus was able to accumulate more shares by the end of the year.
No strategy is foolproof, and dollar cost averaging is no exception. Every strategy comes with its own set of pros and cons. As mentioned earlier, this strategy is particularly effective in times of market volatility, particularly when it's anticipated that the market will go down over a short window of time. However, if the market is steadily going up, as we saw in the previous 2 years, dollar cost averaging will lag straight up investing that lump sum of money. And that's because when we know the market is doing well and there's no foreseeable hurdles to jump over, we want all of our capital put to work and growing for us. Looking at the chart on your screen, we can see the same lump sum investment versus dollar cost averaging investment strategy, but this time, rather than looking at only 1 year, we have widened our time horizon over 20 years. Here you can see the annualized return of the lump sum investment vastly outperformed the dollar cost averaging strategy.
If somebody has a lump sum of cash to invest today, whether to get it invested in one lump sum or to dollar cost average into the market over a period of time really is a personal choice more than anything. History has shown that, generally speaking, markets are usually in an uptrend more often than they're in a sustained downtrend. Of course, there are periods, a few months or even a year where the markets can be in a sustained downtrend. And that's what investors who have lump sums are obviously most fearful of, that they put their lump sum in right before a downtrend. But as the chart before showed that Kevin was speaking to, when you zoom out over that longer time period, 5, 10, certainly 20 years, Whether you put it in before a little downtrend or not as a lump sum is really going to have very minimal impact on your long-term investment experience. But of course, everyone wants to mitigate risk and bad outcomes in the short term. And so dollar cost averaging is that vehicle for you if you are if you're a bit nervous about the markets right now, about US trade policy. There's always something to worry about going on in the world at any moment in time historically, today being no exception either. So whether you want to invest the money in a lump sum or over a set period of time, the key point is that at some point you got to do something with that money. Sitting in cash for a year, 2 years, 3 years, the longer you sit on your hands or sit in cash, the poorer your investment outcomes are going to be. And so the real point is to get that money invested, and it's just a matter of whether you want to put it in one shot or dollar cost average over a set period of time.
As the chart on your screen shows, there have always been headlines or causes for concern which would hold a pessimist back from making investments. Despite this, the markets usually end up climbing the wall of worry and reward investors who can stay invested through thick and thin, as this chart shows how the Dow Jones Industrial Average Index in the US has grown over the decades despite wars, financial crisis, political scandals, military coups, inflation, and other concerns.
As always, if you guys have any questions or want to review the markets or your portfolio with us, we'd be glad to speak with you, arrange for a meeting time or a phone call.
Take care.